Nike is the biggest sportswear brand in the world. However, the stock price is down 30% in the past year. And 2 weeks ago, they posted the second earnings under the new CEO.
Dow component Nike warning sales will drop by a double-digit percentage in the current quarter as the company faces new tariffs, sliding consumer confidence, and a slower than expected corporate turnaround.
Analysts are saying it's the beginning of a long turnaround, and the company is blaming its performance on macro challenges, remote work, and lower consumer spending. Meanwhile, competitors are increasing their sales, and established companies such as Adidas and ASICS are seeing growth while Nike is declining. And the new CEO is expected to turn things around.
Company veteran Elliott Hill is going to come out of retirement like Tom Brady to take the helm.
Now the question becomes if this fall in price is a huge opportunity to make money on Nike. In order to answer this question, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. As you can see, according to my discounted net income and free cash flow, the intrinsic value for Nike is between $40 and $96 per share. And this means that if the low assumptions occur, you're going to make a 1.75% annual return on your money, middle 9.75%, and high 17.5%. I believe my assumptions are reasonable, as I have Nike growing 0% annually for the next 7 years, 3% on my middle assumptions, and 6% annually on my high assumptions. I assume the profit margin and free cash flow margin of 9 on my low, 11% on the middle, and 13% on the high, which is what they have been doing. I also assigned a P and price to free cash flow of 15, 17, and 19 at the end of the 7 years, and assume they buy back 2% of their shares annually for the next 7 years because that's what they have been doing. By the way, these returns include the dividend, which currently has a 2.5% yield. The spreadsheet does not take into account the balance sheet, and Nike has a great balance sheet as they have $10 billion in cash and 11 in debt, which is very little for a company that has a market cap of $93 billion. However, their revenue has remained at around $50 billion over the past few years, and net income between $4 and $5 billion. Their footwear and apparel growth has been decreasing over the past years, and their revenue in North America and Europe has also been decreasing. In conclusion, if you believe that this is a temporary issue due to macroeconomic factors and you believe it's trading at a discount, this is a very good opportunity to start buying Nike, which is a quality company. I am personally waiting until it falls below $55 because I want more margin of safety. I hope you found this video valuable. Let me know what you think about Nike stock in the comments, and I'll see you in the next one.